Okay, fine. Let's talk about Tesla. Alright, before we do that, let's hit the portfolio real quick and then we'll get right into it. Alright, let's get it. Not too much happened this week. I mean, the market kind of took a little bit of a shit. I mean, not too shit, but just a little shit. Kind of the average amount of shit. Let's go over the positions real quick. Bank of America, down 17.03%. Cloudera, up 24.9%. Cisco, down 5.2%. They have earnings today, which I'm gonna listen to right after this. Facebook, up 12.74%. Realty, up 1.07%. If they drop to 48, I may have to buy a lot more of them. Pfizer, up 14.06%. Qualcomm, down 1.50%. Revolve, we are up 7.04%. They also have earnings today. I just looked at them on the other screen, the aftermarket earnings. Both Cisco and Revolve are way up, so I'm pretty excited to listen to both those calls once I'm done with this. Sony, down 11.27%, and Uber, up 20.97%. That gives me a total equity of $11,849.11. So I know I'm very late to this whole Tesla party thing. I haven't paid a whole lot of attention to them. I've seen them all over the news. I mean, unless you've been living under a rock, you know who Elon Musk is. You know what Tesla is. You know what Tesla is doing. Let's take a look at them and see if this is worth investing into. Okay, let's start by taking a look at their financials. We'll get into their 10K in just a minute. Normally I'd read the 10K first and then go through the financials, but since it's the video, let's get with the let's go with this first. So the revenue from 2015 to 2019 looks like they launched up from 4 billion to 24 billion in revenue. Profit, 923 million to 4 billion, and gross profit, not too bad, not too bad. Operating income, looks like they've been operating at a loss. This is the first year where they've actually had operating income. So one thing to note, looks like Tesla has been operating at a loss for as far back as this income sheet goes. Net income, still at a loss, but it's getting closer and closer to profitability. EPS, negative. If you show me just this income statement, I can see a company with massive revenue growth, still being beset by losses. We'd have to look at the 10Ks to figure out, you know, where all this came from and stuff like that. I'm not going to do that on this video. That's something that, you know, you should look into on your own as you go through the 10K. Started out as a loss, it got worse, and then it got better. I say it's a company starting to become profitable. Let's take a look at the balance sheet. Current assets, more assets and liabilities. That's good. Let's take a look at the total assets and liabilities. We got 34.3 assets to 26.1 assets. All right, they have more assets and liabilities. That's good. So as of the last year's annual report, 10.4 billion in long-term debt. They have 6 billion in cash and cash equivalents. Okay, they have a little bit more debt than cash, but they also have equity that can make up for it. So if they absolutely had to, they can sell some equity and some cash and pay off their debt, their long-term debt, if they absolutely had to. That's pretty good. So just by looking at their balance sheet, you can see a company that is exploding in growth. So we can consider this a growth company once it actually achieves profitability. Assets are exploding up. Liabilities are going up as well, but they're staying well below the assets, so that's pretty good. All in all, not a bad balance sheet for a growing company. It hasn't made a profit, but I mean, Uber hasn't made a profit yet either, but I'm bullish on Uber as long as it has great growth potential. So let's look at some of the non-financially related aspects. When analyzing a business, you could go through news article after news article looking for what they do, which you probably should. A part of researching a company should be looking at their news and all the things it's going through. And I will after this video. If you want to know what a company does, all you need to do though is look at the 10K. When researching a company, you should always look through the 10K. It will tell you their business model. It's usually the first thing they tell you. Tesla does a number of things. You probably know them for selling automobiles. Not just automobiles, but electric automobiles. They also have a hand in energy storage. They have a self-sustaining battery that's used for storing energy. and they also have a hand in solar energy. This is stuff that will attach to a house and conduct solar energy. So I can already tell this is a company I really, really like. One thing about my goals as of investing is I want to invest to make money. That's one of the primary goals of investing. But I also want to be right in investing. I want to have conviction in what I invest. I want to invest in companies that I believe in, that I support in. I don't have any interest in supporting any oil companies. I know oil is going to be around for the next 10 years, probably, and I know oil is going to make some money over the next 10 years. But I don't care about oil. I don't want oil to be the future. As a guy who's into technology, I want, self-sustaining energy to be the future. So if I can invest in a company that's poised to make money, as this one is, as you can see by their income statement, I mean, they're getting closer and closer to profitability, and I can make money and support a business I believe in, I'm all for it. So just by looking at their business model and what they do, I mean, they're building electric automobiles, energy efficient, sustaining storage, and they're building energy efficient power production. If I bought into this, I live in an apartment, so I'm unable to take advantage of this. But if I bought into this, depending on how much they're charging, I mean, I could reduce or eliminate my dependability on paying for an electric bill over again. 10K talks about their competition, and I want to go into that a little bit myself. As far as an electric car, I mean, Tesla is at the forefront. It's the closest to making money. I don't think it has any competition in the electric automobile space. I know there's competition that's trying, but they're not doing very well. They don't have a proven model. I think NIO was one of them. I don't even know where they are. Tesla is the one with the biggest market share as far as the electric car. I don't think they have any competitors worth mentioning in the electric automobile space. At least not the cars that can do what Tesla can do. Looking at their competition and their other products and services that they offer, they have some. I can't really comment on this too much. I don't know too much about this market space. Solar energy systems, yes, they're competing with the local utility companies and all that stuff. Well, I don't care. I want Tesla to be right. I think over the long run, I think Tesla's going to gain some pretty good market share. I mean, I have a lot of faith in them. I have a lot of faith in Elon Musk. I mean, the fact that I don't have to tell you who Elon Musk is tells you a lot about his strength as a CEO. I mean, he also runs SpaceX, and he also owns Tesla, obviously. Yeah, I can say right now, this is a company I like. It's the best thing to support out there in the sustaining energy field. This may be our best shot at, take the world taking its steps towards, a oil-free, energy production society, whatever, right? Now, there are some risks. I looked at the risk factors. Let me show you one very important one. While looking through the risk factors of this 10K, I came across something that actually resonated with me. I started thinking about Tesla and all the news and stuff. They are very dependent on Elon Musk. Elon Musk is their greatest strength. Elon Musk is the reason that Tesla is going to succeed if it does. Look at the news, his ability to raise cash at the drop of a hat, fantastic. I mean, Elon got China to accept a gigafactory, him to build a gigafactory in Shanghai, and he also got them to waive tariffs on goods imported from the US to China for his business. I mean, he persuaded China to do that. Now, he had to build a factory to do that, but, I mean, he's a very charismatic CEO. If you like him or hate him, he's very Elon Musk. Now, that being said, he's also the biggest risk. If something happens to him to where he can no longer do Tesla for some reason, I believe that Tesla will be greatly impacted. Will Tesla recover? Maybe, maybe not. But I do believe the company itself is going to take a hit if he ever drops off for some reason. If you ever get a chance to review this company, I encourage you to read through the whole 10K. It will explain to you all their operations and how each of their operations are doing. Their automobile stuff is obviously the biggest part of their business, but the energy generation and storage segment, that's the battery and the solar panel stuff, it's still doing pretty well. It's doing pretty well. It's not as, like I said, it's not as big as their car sales, but it's doing pretty well. Let's take a look at some analyst estimates here. So they're saying at the end of 2020, they're going to go from an EPS of 0.2 to 3.79. Quite a big jump. I mean, high estimate show is 7.83. Low estimate show is losing money. We'll have to see how the quarter shakes out. Next year, 24 analysts are projecting that they're going to reach an average of 11.71 EPS. They're expected to go from 0.2 as of right now to 3.79 all the way to 11.71. That's the average analyst estimate. That's sounding pretty good. They're expecting revenue to jump from 24.5 to 27. But it looks like next year is when they're really expecting them to, really shine. They're going to go from 27 to 38. Okay, fair enough. Now, they're also projecting current year growth of a heck of a lot. And next year, they're going to grow 209%. That's if you believe the analysts. I mean, these are just, these are just predictions. Anything can happen in the future. So all in all, it seems like a pretty decent company to invest in. Now, the question remains, am I going to invest in them now? I mean, lots of things sound nice. A Ferrari sounds nice, but if it's too expensive, I'm not gonna go. I'm not gonna go for it. $790 for a company that's not profitable yet. I don't think I'm ready. But let's do a little bit of math here. So the first thing we need to do is we need to figure out a P ratio that Tesla is going to do in the future. We need to come up with something. What I would normally do is go for Tesla's main competitors, but trying to pick a car manufacturer is absolutely ridiculous. So let's just take some very heavy hitters. Let's take Apple. Their PE ratio right now is 24.17. Let's take Google. So 27.22. So let's just say 25. We'll just give them an average of 25. Now we could think about Amazon, but I'm not going to compare them to Amazon yet. I'm very bullish about Tesla so far as a company and its future. But Amazon has a market cap of 1.18 trillion. Tesla has a market cap of 146 billion. Not quite ready to compare the two. So let's take a P ratio, a fair P ratio for a growing company of 25. Let's say they're going to do 25. Now let's take their analyst estimate. Let's take their analyst estimate at the end of fiscal year 2020. So let's take 1171. Let's multiply it by the P ratio of 25. You know what? Let's go crazy. Let's say Tesla in 2 years becomes a crazy growth company. Let's give it a P of 30. Let's go absolutely bananas. So we're looking at $351 fair value, just estimated. $351 of fair value at the end of 2021 and 2022. Let's go 1 year back. So let's see, I'm expecting an 8% return. So let's divide it by 1.08. That'll get us right now $325 at the end of 2020 and the beginning of 2021. Back 1 more year, take us close to now. So we'll divide it by 1.08 again. We get roughly $300. $300. And because I want to be conservative, let's take 90% of that. Times 0.9. I would say $271 would be a good value to get Tesla at. And that's assuming we go absolutely crazy and assume that Tesla is going to have a PE of 30, which I think would be fair. That price would have to drop substantially for me to consider buying it. So I want to buy it, but I don't think it's worth it yet. I'm bullish about Tesla, but I'm not FOMO bullish of Tesla. I mean, I could buy fractional shares off of Fidelity, but I won't. So what I'm going to do, in light of all this, I'm going to put in a price target of roughly, we'll go crazy. We'll say $300. Will Tesla ever hit that? I don't know. And if it doesn't hit it, that's fine. I won't buy it. I know Tesla might be a $20,000 stock or whatever all the people are saying, but oh well. But if the price does drop to, $271, I'm going to go all in on it. I will definitely invest in that. So all in all, yeah, I'm pretty into Tesla. I'm going to have to wait for the price to come down a lot though before I consider buying it. But, I'll keep watching it. And if it drops to a price I believe in, and I'm definitely going to pull the trigger. So what do you guys think? what price would you pull the trigger on Tesla on? Would you buy it now? Would you wait till it goes lower? Let me know what you think. Anyways, have a great day. Eat your vegetables.